even if you just engage silver up out of its relative performance hole. And by the way, silver has beat gold over the last 12 months. Tell somebody that and they won't believe. Percent gain, January 2024, January 2025. You engage silver up out of its spread hole, relative performance, low priced. And you could easily go to 2%, 2.5%, and it would be routine. It's not even an extraordinary thing. 20 of the last 50 years, you've been there. You do the math on that. It's enormous gains for silver versus gold. So again, we think 2025 is the year to be, watch gold, but especially watch silver and miners re-engage in performance.
Silver has already outperformed gold in percentage gains over the past year. And if this trend continues, a significant revaluation could be on the horizon. According to MichaelOliver from Momentum Structural Analysis, silver's historical performance relative to gold suggests the potential for substantial price increases shortly. As 2025 approaches, silver is emerging as one of the most compelling investment opportunities in the precious metals market. The gold-to-silver ratio is 88.33, indicating that silver may soon outperform gold. Historically, high ratios precede price surges in silver, as seen in the 2011 bull run. If gold stays at or above $2,858 per ounce, a normalization of this ratio could push silver past $50, making it an appealing investment in the commodities market. Gold and silver prices continue to climb, reflecting strong safe haven demand amid ongoing economic uncertainty. Early Thursday trading in the U.S. saw both metals holding firm, with gold hovering near record highs. The broader marketplace remains anxious due to rapid shifts in U.S. government policies, further fueling investor interest in precious metals as a hedge against volatility. While silver has traditionally been valued for its monetary and investment appeal, its industrial applications are increasingly significant in driving demand. Oliver notes that silver production has remained flat over the past 5 years, while demand, especially from the solar energy sector, has grown significantly. Silver is crucial for photovoltaic cells in solar panels, and China dominates 80 to 90% of the global market. Silver consumption is set to rise as the world shifts to renewable energy, and energy security concerns are addressed. Silver's industrial fabrication is forecast to grow by 3% in 2024, with total demand on track to surpass 700 million ounces for the first time. The ongoing structural gains in green economy applications, including solar energy and electric vehicles, are expected to drive sustained demand for silver in the coming years. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop.
Well, the Chinese have 80 to 90% of that market, and the photovoltaic cells in those objects have silver in them. It's an essential ingredient to the solar panels. It's not the kind of cost factor that if it went up would outprice the solar panels. It wouldn't hurt it because it's a small component, but it's an essential component. And it's so suddenly, decades ago when you were a child and when I was a younger guy, silver industrial demand was photos, taking pictures. It was in the, we sort of laugh at that now. That's gone, okay, obviously. But industrial demand, especially for the solar industry, is growing at rates that are vastly outpacing the annual production of silver. Remember, silver is not produced as a primary metal by most miners. There are silver miners, yes, but a lot of silver production comes from base metal miners who produce silver as a secondary metal. They're out to mine copper, but they find silver, so they produce it. But it's not the prime driver that motivates the miners. So even the rise in the silver price doesn't necessarily motivate the base metal miners. But anyway, if you look at an annual production of silver, you've got a flat picture for the last 5 years or so. And it's not increasing, despite the price having gone up. But demand is increasing exponentially. And this solar demand, I think, is going to continue, particularly when uncertainty hits certain parts of the world, including the U.S., where, I'd like to be confident that my house has power. If you live in Texas, you get knocked out almost every year because of hurricanes. For 2 weeks, you're out because the power's down. And pretty soon you get fed up and you want a solar panel. So even domestic solar panel demand, as I understand it, in this country, is rising sharply and ongoing. So that's a factor that it's already underway, but it's a factor that once silver gets going, they always tend to find an excuse or a reason. Oh, now I know why. But meanwhile, you're $55 and just blew out the two highs of the last 50 years. before those headlines start to hit the public. And that's kind of what I expect, is that once the silver engages in its next leg, and I think we're about to, that it will be dramatic. And those two peaks at 50 that were, brief moments in time, 1975, 80, and then 2011. So it really wasn't a price level that sustained it all. It was for literally a few days. But those old highs will come out. And I think at that point, you're going to see silver do something like what we looked at on the XAU versus gold chart. And if you look at the spread of silver versus gold going back 50 years, you'll see that 20 of those 50 years, the price of silver divided into gold was at least 2%, sometimes 2.5 or 3. Right now, it's 1.15%. So even if you just engage silver up out of its relative performance hole. And by the way, silver has beat gold over the last 12 months. Tell somebody that and they won't believe. Percent gain, January 2024. You engage silver up out of its spread hole, relative performance low priced. And you could easily go to 2%, 2.5%, and it would be routine. It's not even an extraordinary thing. 20 of the last 50 years, you've been there. Well, you do the math on that. It's enormous gains for silver versus gold. So again, we think 2025 is the year to be, watch gold, but especially watch silver and miners re-engage in performance.
Gold has emerged as a standout performer in recent financial markets, with its price in U.S. dollars surging 25.5% in 2024, narrowly edging out the S&P 500's total return of 25%, including dividends. The precious metals momentum continued into January 2025, recording a 6.4% gain and reaching historic highs, while the S&P 500 posted a more modest 2.8% total return. Market analyst MichaelOliver notes that gold's outperformance relative to the S&P 500 since January 2024 challenges traditional investment narratives. Looking at a broader time frame, gold has demonstrated remarkable resilience over the past 9 years, nearly matching the stock market's performance and questioning the long-held belief in equity's dominance as an asset class. The Federal Reserve's recent decision to maintain steady interest rates amid persistent inflation concerns hasn't dampened gold's upward trajectory in 2025. While lower interest rates typically boost gold prices by reducing borrowing costs, the current market dynamics suggest that geopolitical factors play a more significant role in driving gold's performance. The relationship between interest rates and gold prices is multifaceted. Higher rates can diminish consumer demand for gold-based luxury items, but they also tend to decrease capital investment in gold production, potentially constraining supply. However, geopolitical uncertainty has emerged as the predominant force behind gold's strong start to 2025, overshadowing these traditional market influences.
So we're bullish on gold and silver ongoing. We've never changed. All the nonsense on the way up is just arm wrestling. But we did go through a period from mid-2020 through early 2024 where silver and the miners staircased down and gold went sideways. Go up over 2,000, got hit. Go over 2,000, got hit. Go over 2,000, got hit. Go over 2,000, got hit. Okay. Persistence is what that's called. But that congestion zone by our metrics broke out in March of 2024. Now, in other words, we had enough long-term metrics that re-engaged after being asleep for a while. Quarterly momentum, for example. So gold then was just above 2,000. Okay, well, this time, it was the fourth time. How do you know it wasn't going to fail? Because momentum said we're not going to fail this time. Okay, it was going to engage. Silver was 25 to 26 zone. Still well below its $30 high it saw in 2020. But momentum said, no, we're coming out of here. Gold miners, GDX, for example, was 31.5 as our trigger level. Well, it traded up to 41 the other day. Okay. So but we still have this arm wrestling process, where you make a couple $100 in gold, next thing you know, you drop back 100. I don't know, or silver goes up $3 or $4 and drops back 2 or 3, and then goes again, but it's an arduous process and it keeps shaking people out. It keeps people skeptical. It keeps the enthusiasm low. As far as I'm concerned, that's great. Keep it low. Okay. We want to compress it. Meanwhile, the enthusiasm's over there in the stock market. But if you do objective measuring, let's say you're an asset manager and you're a little bit nervous about the stock market, First off, it hadn't gained much ground since its July high. I think the S&P's up about 3% or something. But if you go back and look, and let's say you're the head of the fund, and you ask your trading guy in the back room, your technician, say, give me some ideas of other places to be that might be safe, that might be lower risk, might be cheap, And he says, well, boss, gold miners are cheap and starting to firm up. Gold's doing well. And how well is gold doing? Well, since the close of January 24 to the close of January 25, so a 12 full month period, gold beat the pants off the stock market. What? You wouldn't believe that if you listen to Fox Business News because, Trump got elected, or if you listen to CNBC. The stock market is the fever. Okay. Nobody seems to be noticing that gold has beat the stock market over the last year. And in fact, since the last 9 years, has almost matched the stock market. When gold was back in December 2015, for example, it was $1,050. You go back and check where the S&P was then and do the percent gain, and you'll find S&P's barely beating gold. And when you measure it against the gold miners, a tiny little subsector of the stock market nobody cares about, it's beating the stock market. Yes, it's actually up more from where it was at its bare lows in 2015 than where the S&P was at that same point in time. So I think that once you punch a hole in the stock market, it doesn't have to crash. I'm not talking about that. I'm talking, we just punch a hole to where the nervous guys say, hey, I need to shift some money. And so some of these asset managers, non-gold bugs even, say, okay, let's move some over there. They got good earnings. Jeez, the dividends are good, especially some of the big miners, and they've been doing well. But I think the stock market is that factor that once you punch a hole in it and drop it 10%, let's say, you're going to have a lot of that money moving. And I think that is the factor right now from the outside that will help engage gold and silver in a more vertical manner. And I think that's near at hand.
As gold continues to challenge conventional investment wisdom and silver gains traction from both monetary and industrial demand, the precious metals market stands at a pivotal moment. With historical patterns hinting at a potential silver breakout and gold maintaining its strength amid economic uncertainty, investors are closely watching for the next significant move. Given the evolving landscape of financial markets and global policies, could silver's rising industrial significance finally push it past its long-standing barriers, or will gold remain the dominant force in the safe haven trade? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.